is what's the Fed going to say? What are they going to do? I'm in the camp for a 25 basis point hike. I think that considering less than 2 weeks ago, Jerome Powell was mentioning he might have to do 50 basis points. I can't imagine them going to zero unless the banking situation deteriorates so much more than it already has. So I'm in the camp for 25, and then I think they'll actually calm the markets by saying, hey, we're going to wait a while here. Let's see what happens, and we're going to stop the rate hikes after this one.
Gareth Soloway, the chief market strategist at Verified Investing, sheds light on the recent bank crisis and expresses his concerns about the Federal Reserve's impact on inflation. According to Soloway, the interest rates are likely to remain high throughout most of 2023 and may only decrease in 2024. He also predicts that the cryptocurrency market may not see the necessary growth to recover anytime soon. It was reported that there was a strong likelihood of a 50 basis point increase in interest rates by the Federal Reserve at the next two meetings. However, following the European Central Bank's decision to increase rates by 50 beps, the market now expects only a single Fed hike of 25 basis points next week and the possibility of a rate cut by late summer. Morgan warns that while the new Fed program could alleviate banking reserve problems, it may also reverse previous tightening measures intended to combat inflation. Gareth remarked that the Federal Reserve is left in a difficult position once inflation begins to spiral out of control. The recent surge in prices may have dampened the possibility of an extended rally, despite the potential for the Federal Reserve to reach their peak interest rate soon and a possible further weakening of the U.S. dollar. During his recent interview, Gareth shares his insight on why he thinks the Federal Reserve will not permit the markets to rise too much and anticipates the occurrence of lower lows. Don't forget to subscribe to our channel and click on the bell icon to receive regular updates.
Do you think that the Fed saw the crisis of the banks? Like for me, I look at it, and this kind of drives me nuts, is that if you're the Federal Reserve, you should have your finger on the pulse of the banking system, right? That's kind of your job. And so the question is did they see this coming, or were they blindsided by this? I mean, it certainly seems like they weren't really ahead of this issue. And so to me, it's another issue of does the Fed really know what the heck they're doing? I mean, they said transitory. It wasn't transitory. They jacked rates up to try to, curtail inflation really quickly. Did they not see that this was going to have some consequences behind it? Investors got to still be very wary, right? The Fed isn't going to, number one, the Fed's not going to just go to cutting rates, right? They're not going to, you're not going to see this all of a sudden, this massive pivot where interest rates miraculously go back to 1% on the Fed funds. I mean, it's just not going to happen in a long period of time. Now, are they going to finally pause? Yeah, I think that makes sense. Maybe drop rates by 2024 a tiny bit, but I just do not see them dropping rates all the way back down. And if they have to do that, the economic situation is going to be ridiculously horrible for them to do that.
In terms of Bitcoin's recent selling, Gareth believes it's not yet over, and that the fear created by the banks has driven investors to purchase Bitcoin as a temporary safe haven. Despite the recent developments, Gareth anticipates that this will only result in a brief upswing. Gareth emphasizes the significance of maintaining a broader outlook on the current market trends. He notes that the current bear market is not conducive to a Bitcoin surge, as there is no decline in interest rates or quantitative easing measures being implemented. Furthermore, Gareth believes that the chances of these events occurring this year are slim.
Partial, right? So you have the Fed potentially, instead of a 50 basis point, which prior to last weekend we were kind of thinking about, now all of a sudden 0 or 25, and obviously most likely a pause after that. And then also, I think that there was this massive amount of money that flowed from bank stocks and the markets into Bitcoin, which helped push it up like we see it on the chart in front of us. And so I think it's a combination of that. I do think that once the banking situation calms down, you do see some of that money come out of crypto in terms of Bitcoin and Ethereum, but it certainly was part of that. And we saw it in gold, right? I mean, gold has had a massive run up as well. And if we think about it logically, just, the Fed going to 25 or to 0, it's not like they're dropping rates. So it doesn't necessarily tell us that gold should be ripping north of its all-time highs, but we are getting pretty close because of some of the money flow, the people taking kind of a protective measure here in these assets.
Yeah. So what are you seeing for Bitcoin? Where do you have that in your short-term, midterm view right now?
Yeah. So short-term, it's looking likely that we could retest this 28,500 area right here, which again, interestingly enough, it was your lowest point from 2021's midpoint of that cycle, that bull cycle. And it's also this low of the consolidation right here. So that's my short-term resistance right around 28.5, 28.6. If we can pierce that, then we go right to that even number of 30,000, which was right above it right here. So I'm in the camp where if we get there in the next few days, let's say by Tuesday or so, I will be actually looking to short Bitcoin at that point, considering how extended the short-term move is here. Also considering that I do expect some of the money flow that's gone from bank stocks into crypto probably does reverse back out. And remember that, in a short-term amount, people are hiding in Bitcoin, right? It's, I don't trust being in the banks. I don't trust my deposits in banks, maybe, but there's also a lack of trust in crypto where you don't know the regulation yet. You don't know all these different things. So you could have this yank of liquidity or money flow back and forth in these two asset classes. So it is an interesting thing to watch. But either way, I do believe that we'll pull back if we hit that 28.5 or 30,000 level.
Gareth Soloway is of the opinion that the recent surge in the prices of Bitcoin, Ether, and other cryptocurrencies at the start of 2023 is merely a bear market rally. Despite the Federal Reserve appearing to approach the end of its hiking cycle and the potential absence of any further increases, Gareth Soloway maintains that the recent movement in the crypto market is not expected to be sustained.
And I think that's a good point. And not only has money now rotated over the last few days into the NASDAQ, but also crypto. I mean, not so much the altcoins, but Bitcoin and Ethereum. This is like their first test case in a long, long time, right? Their first banking crisis since the inception of Bitcoin. And you've absolutely seen a huge amount of money roll over into cryptocurrencies, specifically Bitcoin and Ethereum. And I think that's fascinating. You think about the reasoning behind the creation of Bitcoin, and here we are. I mean, this is just one of those use cases for it, and I think it adds credence. I'm still not in the camp where I think that necessarily the lows are all the way in on Bitcoin or Ethereum, but you can't deny that this just strengthens the case long term for why we need Bitcoin.
The overall cryptocurrency market cap now stands at $1.06 trillion, and Bitcoin's dominance rate is 44.3%. On February 22, Gareth said, Bitcoin is lingering around $24,400 as Asia begins its business day, down 1.6% in the last 24 hours. Ether has also experienced a slight correction too, down 2.3% to $1,661. Gareth Soloway took to Twitter to share his thoughts, stating that Ether is attempting to close above its range for the day with high chances of success. He further added that he will be keeping an eye out for confirmation to indicate a move towards some $1,700. In the same tweet, Gareth pointed out that Bitcoin has yet to surpass the crucial level of $21,800. Stay updated on the latest market movements by following Gareth's Twitter updates.
As of now, Bitcoin, and again, this might sound crazy to some people, but I'm still not in the camp that we've put in a low. I don't have the factors in place on a chart that tell me that the low is in for this entire cycle. And the main reason for that too is if you zoom out on the chart, right? If we look at this bigger picture, this again is a nice bounce. It's a fantastic percentage-wise bounce off the lows. But again, we haven't even recaptured this area here. And this is kind of my line in the sand, this 30,000, 30,500 level. So as long as we stay below that, I'm in the camp that we still can roll over. We can still maybe make new lows. I don't think, for me, it's not so much that Bitcoin is going to have another FTX scenario necessarily. It's more to me that I do believe the traditional markets are going to have a major drop. And if that happens, I'm still in the camp that Bitcoin is going to struggle as it will spread. The kind of the panic and the fear will spread across all asset classes. Maybe not so much gold, but even gold could see some selling. Yeah, Ethereum's super interesting because we have this channel and you still have it. You're right at that upper level, right in here. And you're still kind of bubbling up against resistance. So that's one of the reasons why I started a little short position here in Ethereum is just the fact that it's still struggling to get through this area of resistance right here. Now, if it does get through, you're going to head to $2,000. $2,000 was your highest pivot since it put in the low. So back in June when it made a low of around just under 900, it had that monster rally to about 2,000. That would be your short-term resistance level on the charts. And again, that would be a level where I would add to my short at this stage.
As per the expert's opinion, we can expect to witness a moderate rise in inflation, but it will not reach the levels witnessed over the past year. Furthermore, with gold making significant strides in catching up, it's an indicator that the market is evolving. Gareth Soloway has taken to Twitter to emphasize the importance of being cautious about the current movement in the crypto market despite the recent 30% surge in Bitcoin. His series of tweets serve as a reminder to stay grounded and keep a broader perspective on the market trends. We value your feedback and would love to hear your thoughts in the comments section below. If you found this video informative or entertaining, Please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. We look forward to seeing you again soon.